Thank you so much for joining us. Now we move to the next topic, which is a panel discussion on what's driving adoption of blockchain in the enterprise. I'd like to invite the three panelists to join me. I think it's going to be a great discussion. So with that, the founder of Scale Labs, Jack O'Halloran. Give him a round of applause, folks. The CTO of Hyperledger Foundation, Hart Montgomery, and the founder of Transcripts, Zain Zaidi. How are you guys doing today?
Doing good.
Are you local to San Francisco?
I am. I live a few minutes from here. So is it much easier than getting on a flight?
You know, it
come to the
takes
conference.
2 hours to get here. I can get to Orange County much faster than driving to San Francisco.
It's the truth.
I know, Zain, you're in East Bay?
I'm in Fremont, yeah.
You're in Fremont, and you're San Francisco.
Yeah. I'm down in Potrero Hill.
So, gentlemen, thank you for joining us. I really appreciate it. I was thinking, you know, if you go back 2017, 18, I was at an event in Palo Alto, and it was at a law office of, you know, one of those big firms there. There was room for like 40 people, and there were like 70 people in the room. It was a VC panel, and the VCs were saying, for the first time in our careers, we are feeling completely, you know, outdated or unwanted because so much of money was being raised by ICOs, right? There was the ICO boom and all of that. And then, you know, we saw the ups and downs, we saw crypto winter and all of that. But I think now we are getting to that actual, you know, where great use cases are happening. So we're going to have a great discussion today to talk about what's the buzz in enterprise blockchain and everything. To set the stage for our conversation, I'll start with a question with you, Jack. But actually, before we do that, will it be okay if y'all can take maybe 45 seconds to tell the audience what are the cool things you guys are doing with each of your organizations?
Yeah. So, hey, I'm Jack O'Halloran. I'm the CEO and co-founder of Scale Labs. We're the core team behind the Scale Network. Scale right now has over 40 million on-chain transactions a month and usually over 5 million active wallets a month. And we're very focused on gaming. We're very focused on Web3 AI. We're very focused on decentralized social. It's just really where you want zero friction, great user experience, and letting the more masses of people leverage and interact with blockchain is where we focus to help partners and applications.
Awesome. Yeah, thanks. So I work as the CTO of the Hyperledger Foundation. We're a sub-foundation of the Linux Foundation. So we are a very large open source, open development organization. You know, we're completely free and open to participate in. You can show up to meetings. You can use the software. You can download the code. You can submit PRs. Please submit PRs. Whatever you want. So, you know, please come check us out.
Awesome. Hi, everyone. My name is Zain. I'm the co-founder and CEO of Transcripts. Transcripts for building self-sovereign verification for the masses. Our beachhead primary product is a tool for HRs to automate the issuance of employment and income verification by allowing their employees to self-serve these requests directly. We launched about 18 months ago, have served about 2.5 million Americans and about 210 enterprises.
Great. Thank you for you know, providing a brief overview of what you guys do. So Jack, the first question to you, because this is related to the hype cycle, the Gartner hype cycle. So we've seen, you know, the hype cycle, and those of you know this, those of you who follow Gartner, they put a hype cycle for different categories, and you know, you have the days where the innovation is there, and then the irrational, you know, expectations, and then you have disillusionment. Then, you know, there's the enlightenment phase, and then you actually get to a point where real problems are being solved and the industry matures, right? So I wanted to ask you, Jack, where do you think we are as far as blockchain is concerned on this maturity curve? You know, what are your thoughts on where we are now?
Yeah, and I see some familiar faces here. So I think there's a lot of us have seen this progression. And if you remember the 2017 cycle, it was like every dentist would accept crypto for your dental payments. And we were just really off on how these things were going to come together, right? It was like pre-stable coins. gas fees were enormous. We had very little block space to share across just, EVM with one real EVM solution out there. And things have changed dramatically. And also just like the fiat on-ramps were completely not ready. So all the infrastructure around the chain was just not there. And so we're finally at this point where there's nothing blocking you. If you are an enterprise, if you're a business, if you're a professional sports league, if you're a band, if you're a consumer brand, you can launch something that normal people can use without great friction that is also compliant. So that we have that happening, but we still, with each one of these cycles, I think are always overextending ourselves. We're leaning over the skis a bit. But I think this is one of these really nice times where we're coming out of the down part of the market and builders are there saying, hey, now's the time to build and we better start building and let's build things that are going to get through these cycle waves. And they shouldn't be cycle dependent. Like if you're an enterprise, if you have millions of people in your community, you don't want to launch something that is only valuable once every 4 years, right? And so I think we're learning not just about the technology, but the use cases and how to deploy products in the enterprise and within traditional businesses.
Awesome. My next question is to Hart. So at Hyperledger, Hart, you have a whole bunch of mega brands. I believe over 150 large enterprises who are your partners who are building enterprise blockchains with your tools, right? And just to throw some names, the likes of Walmart and Fujitsu, IBM, Bosch, American Express, all iconic brands. So what's the buzz you're seeing with some of these large enterprises, and what are some of the real world problems that they are focusing on?
Yeah, absolutely. That's a great question. One of the nice things about the enterprise market for blockchain is there's sort of been much less up and down than in the cryptocurrency market. A lot of these big enterprises have sort of run the numbers on the value proposition for blockchain solutions, seen the benefit and have gradually been building towards that. So we've seen a number of really cool solutions recently. There's a lot of stuff around shipping and trade finance. NTT's Trade Waltz, for instance, which is used by a number of companies in Japan, has dramatically increased the time of shipping releases, I think, by 85 to 90%, and supposedly makes the humans in the system 47% more efficient. Now, I have no idea what they're measuring there, but that's what they say. So we see a lot of speed ups, that aren't really exciting to customers, but to big enterprises, efficiency is key. And if you can make things, more efficient, that's fantastic for your business. You mentioned Walmart. Walmart's, food tracking program was one of the, original supply chain use case applications of blockchain. And it's saved them a bunch of money in real world product recalls where some vegetable or fruit has been recalled. They've been tracking it on their supply chain blockchain, and they can very precisely throw out the affected fruit or vegetable rather than having to do what they did in the old days and throw away all the stock. I would say right now a lot of financial companies and enterprises are really capturing a lot of the buzz and moving into blockchain. Traditional finance like banks have been sort of slower to adopt, but we're really seeing that change, and that's getting a lot of attention.
That's impressive. And just as a follow-up to that, right? It seems to me almost every large organization is doing something in blockchain, right? Most of them are doing it, right? In some cases, it may be proof of pilot, of R&D, et cetera. What do you think will drive that more significant adoption, right? Where it gets more strategic to them?
Well, in a lot of cases, we've seen people sort of, companies really, especially banks, be the proverbial ducks on the edge of the water. And we're sort of, when one company goes in, then a bunch of other companies follow. But in general, the whole story has just been people building and building and building and, trialing and, moving forward. So it's been a gradual process and we're getting there. And I mean, it's, people want to have full confidence in the software, from a security perspective, from a reliability perspective. Just one number I like to throw around is, DTCC is one of our members, and
It's one of the largest clearing houses
Yeah.
in the world, the largest. Right?
and the money involved is massive. I mean, does anybody want to take a guess about how much money DTCC clears in a year?
Maybe, 10 trillion,
It's in the quadrillions.
quadrillions.
So,
Staggering.
it's huge. And if you're going to put this kind of money on a blockchain system, you better be confident that that's correct. And for this reason, a lot of these banks and financial companies are extremely conservative. But, they are still progressing forward.
Cool. Suzanne, I'm very tempted to ask you this. So when you started building transcripts, right? So did you start by saying, hey, I want to do something in blockchain, and you found a problem that was worth solving? Or was it the other way around, where you found a problem worth solving and you said, hey, I think blockchain is the best way to solve it?
That's actually a great question. So I think you always start with the problem. Technology is the supplementing piece. You have to be customer focused. Ultimately, when we go sell to the HR urban outfitters, they don't care if we're on blockchain. They don't care if we're on using AI. They care that we save them X dollars, X amount of time, and that we're FCRA compliant. That's all they care about. So you have to build the solution technology agnostic. And you really can't say, okay, I'm building a blockchain solution and I'm going to make this for HRs. No, I'm going to solve a problem for HRs, and blockchain is the best way of solving that problem. I think having that mindset, and when I also looking at a lot of Web3 companies, it's kind of easy to tell the companies that will succeed, because ultimately the rules of business don't change just because you're operating on blockchain or Web3. You have to solve a real problem, especially in the enterprise space.
No, brilliant answer, because I felt going back a few years, right? It was everyone excited about blockchain, and it was the solution trying to find the problem, right? So I'm glad you shared that. So that's pretty cool. While the microphone's with you, are you able to share how you landed your first one or two early customers?
Yeah, so our first one or two early customers aren't that impressive, but maybe I'll go with our one of our larger customers. So my co-founder is right there, Ali, and we created this company straight out of college. So we didn't have established relationships in the industry. We didn't have. No, I went to San Jose State. He went to the University of Toronto. Then we ended up going to grad school at Harvard, and that's kind of the premise of the idea came from there. But the very first customer that we were able to get is, we actually started off, as the name implies, in education records. We were originally selling towards universities. We really quickly realized universities aren't incentivized to make a better application for their students, because they're not very sensitive to price. Saving money is not actually a big deal for universities. They can just raise tuition, as all students know. But HRs, on the other hand, they spend a tremendous amount of time handling employment and income verification. Every single time you apply for a new place to live, a new loan, a new job, your HR manager at your previous company is getting a phone call and email saying, hey, does Zain work here? Or hey, does Ali work here? In an age of AI, where you can create an AI bot that can mimic a human's voice and that can, fraudulently respond to a phone call, that's not very secure. Now, we had to convince people that it's not very secure back in 2020, which was a little difficult. It's increasingly less difficult today. But for our first customer, we just focused on the problem. Just, what is the problem that you're dealing with? You're spending this many dollars, it's taking you this much time, and there's a compliance aspect. Let's solve each one of these. And this is why blockchain is the best way to do it. And better yet, there's no learning curve, because we'll make our platform fit your needs. It feels like a Web2 platform. When you use Transcripts today, it doesn't feel like a Web3 platform. because you got to meet the customer where they are. They don't know how to use a wallet, right? No HR manager knows how to use a wallet, but they know how to use Google's single sign-on to get on and to log on to Transcripts' portal. So we meet our customers where they are, and I think that's kind of using that methodology is how we kind of landed our first client.
That's cool. Jack, I'm very tempted to ask you this. So we always hear about the trilemma in the blockchain world, right? The scalability, security, and decentralization. What are your thoughts on where are we as an industry within, everything that you're doing? Where are we on the trilemma? And yeah, your thoughts.
Yeah, I think it was first seen as this impossible hurdle. But then I think what people realized is we have to make, creative changes and adjustments here to get more value somewhere else, and maybe give up a little bit on decentralization, get a little bit more speed, agility, cost effectiveness, right? And the thing is, it isn't just in the framework of one set of nodes or one set of validators. So you have these different unique systems that are built, right? And so Scale, for example, is built into the Ethereum mainnet. And then there's a second layer of nodes on top of that. And then there's a third layer of actual chains that are all pooling and sharing security amongst that set. And then within the Ethereum network, okay? And so that's a model. There's other models out there that are all trying to solve for the same thing. And our goal was, hey, how can we have incredibly low costs and zero fees for the end users? Because, what situation works in like the Web 2 or traditional business B2B model where the more someone uses your product, the more they have to pay? That's kind of, you want them to pay more eventually, but you want to, not have friction each time they utilize the product. And we learned that, and that's why we have all these sophisticated price models in SaaS and, platform as a service businesses. So anyways, there's innovations happening. And finally, we're at a point where I mentioned this earlier. If you want to launch something, you can launch something with like very low friction. We have single sign-on solutions, custodial wallet solutions, fiat ramps on and off. We have hyper secure blockchains with really great UX properties and decentralization. Now, where I'm seeing the gap and kind of the pendulum swing is that it's in the implementation. And so you look at a lot of Web3 implementations and like, great, look at all the effort in the systems design and the architecture to make sure this is decentralized. But then the way that it's deployed, it doesn't even need to be on blockchain because one developer just has control of everything. And so I've been talking a lot specifically in gaming, and also we work with huge global brands that have loyalty programs, engagement programs. We work with global international sports leagues that have millions and millions of fans, and they want to connect more and have more loyalty and engagement. But to me, it's really important to not throw the core principles away. You need to, meaning core principles of why is it even on a blockchain? And it's because you're trying to utilize the blockchain for some element of transparency, immutability, permanence, et cetera, right? And oftentimes the way that the actual implementation works, it may as well just be on a centralized database. So my team, and I know a lot of other people building, are trying to work with the inside, customer or partner on ensuring that the way they implement blockchain keeps in mind with the fact that like, well, why is it even on a blockchain in the first place? And that's kind of the, thankfully we're getting rid of the friction, but we need to be sure we're staying true to core principles, or why even do it?
Does one worry you more than the other?
The one that worries me I think the most is if we have something that only an engineer can use that knows how to use Ledger and plug into MetaMask, no one's going to use this stuff. So that's probably the worst outcome. Giving up a little too much control to a developer who's deploying, and not as big of a deal, but there's ways to deploy and leverage multi-sigs and have backup solutions and custodial wallets, and do some things to still ensure that, the user has some, depending on the use case, has the right level of control and authority and, visibility into what's happening on chain. So I think I'm personally really in favor of good UX and growing the space, but also seeing like the next problem is going to be people saying, why is this even on blockchain? It's just, it's just a different database the way it's been implemented.
And you guys zero gas fees, right? For forever, right?
Yeah, well, there's still a fee, but it's paid by the developer. So there's a chain fee, okay? And the unit economics end up being a lot better. But let's say you've got a game builder and you've got a game company and they're launching a game. Well, they can actually buy scale tokens and rent a piece of that chain. And it's like a SaaS model. And so as long as they're paying for that, they can run up to X% of transactions or gas computation per what they're renting in that chain. They can rent the whole chain or rent a smaller piece. So you still have to pay people that stake and people that run nodes or entities that do either of those things to have a blockchain be decentralized and have economic value. But our goal was in the actual design, all the way down to the way consensus functions and works, is this kind of decentralized SaaS model of blockchain payment.
Hart, you want to add anything on the trilemma, your thoughts on where we are?
Yeah, absolutely. I will first say something possibly controversial. I'm not a fan of the trilemma because it includes security. Please don't compromise security on your blockchain software or any software. But the trade-off between, scalability and decentralization is extremely real, and you should carefully consider, what system you want to use based on what decentralization you need. I encourage people to, pick what decentralization is acceptable, and then you can sort of figure out what you need to get the maximum performance. As far as enterprise scalability, though, you might be surprised about how okay the solutions are today. For something like finance or supply chain, there are often humans that have to be involved. And with the way regulations are today, you can't take them out of the equation or the system, right? So even in sort of a best case, you might take some settlement or some supply chain procedure that takes 4 days. Maybe you can take it down to a few hours. That's a huge win. But that's not, especially taxing on your blockchain, right? No one is going to worry if a transaction takes a few minutes to process in this case. As far as some other scalability applications, like payment systems, those get complicated. But then you have more stuff that comes into like privacy. And that's, a whole nother aspect that will decrease performance and is another trade-off.
Cool. We'll switch to decentralization, and Zain, let me ask you this and see if what your thoughts are. So decentralization, some organizations may love decentralization because of the increased risk, the transparency, maybe reduce costs, improve security. But other organizations may hate it, right? Because the speeds may not be there, or they don't want to lose control. So in your world, how do you sell the benefits of decentralization?
So maybe I can start with what it means to be decentralized in our space, right? So with employment and income records, the people who own employment and income records are the HR, right? They're the ones who employ you and they're the ones who pay you. They have access to that in a Gusto, a Rippling, an ADP, some sort of centralized HR database. Now, from the HR's perspective, whenever they give out your employment information and income information to Bank of America or JP Morgan or whoever, there's something called the FCRA consent form. It's Fair Credit Reporting Act. It requires that the employee gives consent for this information to be shared. HRs, as many of you know, are very, they don't like, their entire job is regulation and compliance and making sure an organization follows federal, state regulation and compliance. They prefer it if they can offshore as much compliance as possible in a way that they know that's not going to come bite them back in the butt later down the road. So with our system, decentralization is actually a huge plus, because when the employee shares their document with Bank of America using Transcripts, they don't have to worry about FCRA compliance because the employee has given consent to that document being shared. Now, where they have concern is where is that information being stored? If it's not being stored in our Rippling or in our Gusto or our ADP, which we know and trust, is it being, where on this magical blockchain universe is it being stored? That's a little bit of a uphill battle, trying to sell that to them. There's ways around it where we have all like typical enterprise security stuff, SOC 2, this and that. And that kind of addresses a lot of the IT concerns that these companies have. But for the most part, actually decentralization for our customer is actually a big bonus because they don't have to worry about the compliance aspect of it. They're no longer liable if this information gets in the hands of a bad actor. The employee is liable. So they prefer giving that compliance and that liability right back to the employee.
And Jack, your take on, selling, the benefits of decentralization?
Yeah, I think it depends on who you're talking to, right? If you're talking to a DeFi maximalist purist, you better be very decentralized. If you're talking to a business, decentralization to me is what's the, how critical is it to ensure that that data and information will be there? One of the beauties of decentralization is actually this like redundancy quality, right? By having, your networks that are less brittle, you have information that is less brittle and more, immutable, right? And that's why we do this. So what are your failure points? How many are there? And does it have to be, do I care if these are running on high powered servers? No, I want them to if I'm an enterprise, but if I'm, a pure decentralization purist, I want to make sure that like, the little guy, can plug a server in and still make money by helping validate blocks. So I think enterprises don't care about that other scenario, but they do care about redundancy and having, if there's only 9 node operators in full and, 5 of them go down, well, the data's gone, right? Your liveliness is broken. And if you care about like, the sanctity of the data in a blockchain and you're not just going to be able to pull it out and, bootstrap another chain. So I think that's really, to me, in the enterprise where it matters.
I'll open it up to questions from the audience after, one question to Hart around interoperability, which is also big. And Hart, from your vantage point, you're looking at so many, you're working with so many big names. What are the significant developments you've seen around interoperability?
Sure. I've always been a big believer in interoperability. Back before my LF days, I actually helped launch the Hyperledger project that focuses primarily on interoperability. Back when I was working at Fujitsu, I don't believe there will be sort of one blockchain to rule them all, right? There are all these trade-offs. We talked about the trilemma. And even the most hardcore Ethereum maximalist, is supporting L2s and even L3s and chains. So you can view, the interaction between all of these chains as interoperability. But we're also going to need interoperability between various different chains. We need interoperability with legacy systems for many business applications. So we see this all the time. It's blowing up. And this is just chain-to-chain interoperability, right? We also want interoperability in the sense that if I write an application once, I ideally would not have to wouldn't have to recode it for every different chain. We're seeing more and more of that, and sort of all of this come up. Within Hyperledger, we have 2 projects, Hyperledger Cacti and Hyperledger Firefly. Cacti is sort of focused on cross-chain transactions, atomic swaps, things like that. Firefly is sort of a middleware for blockchain, where if you write blockchain code once, you can run it through sort of on a Firefly platform and it'll run on a lot of different chains. These are becoming very popular with enterprises. If you're interested, you can go to the Get Up Today and try them out yourself.
Awesome. Now, would love to take 1 or 2 questions. Anybody, has questions for our audience?
Can I weigh in on that too? Because I just want to double down on something you said. I feel like we figured out this like chain-to-chain interoperability, but it's legacy system interoperability. And, when I heard Salesforce is no longer pursuing this, Web3 strategy, they were building incredible software that helped businesses be able to deploy NFTs and deploy blockchain assets and incorporate them into marketing automation systems and CRM systems. And so this connection between on-chain activity and, hash addresses and like your identity as far as an organization is concerned about who you are is like, I think the next frontier. And, Like I'd love to see that interoperability move forward. I think there's a lot of opportunities for entrepreneurs who are looking where to build in the space to build those tools.
Great insight. So yeah, we have a couple of hands. I saw that first and we'll come to you, sir. So go ahead.
I don't love the numbering either. Some people went from Web3 and then decided that they were going to go to Web5. It's been a trend. So it doesn't make sense to me. It's not intuitive. So I totally agree with you. When people tell me they're on Web5, I usually say I'm on Web Pi just to be a troll. But, you know, so yeah, I totally agree with you that the numbering just doesn't make sense.
How about you, sir? Or
Yeah, I was going to say, I think we've won when the numbers go away. Okay. And like, you think, look at Web3 gaming. Well, when Web3 gaming's a dead term and there's just gaming and there's all this backend infrastructure that also happens to be on a blockchain and use NFTs, it means it's just so integrated into all the tools and products we use. And then we've all really won if we're out here carrying the flag of, you know, blockchain and crypto. So, you know, but it'll be a while and there'll be, you know, some, you know, things that make you like cringe, some terms like Web5 in the interim.
one more question.
Hi, I'm Zahid, founder of Jutsu. So my question is, what do you think about number of developer affecting the adoption of Web3? Because today is like according to Electronic Capital, like their surveys like a 23,000 of Web3 developer. So what is your thinking behind like why we are not able to attract more developer? And if you compare with Web2, because there are more developer and they're building more application and application are becoming more useful for everyday user.
I mean, I'd like to challenge those numbers because one issue I have with that report is it's about who's contributing. Like, did I do a pull request for Hyperledger? Okay, I'm one of those 20,000 people, but what about the 100,000 developers that are just someone on their team is deploying to a chain? So I think there's a lot of people, like, look at Scale. We have over 1,000 developers just in the ecosystem, but not all of them are submitting pull requests to our open source code base or their own bases that are open source. So I think there's a little.
Can I challenge your thought? Like one thing I found is that 1,000 developer you mentioned, they work in Ethereum ecosystem, then they go contribute to Near ecosystem or Hyperledger. So like how can we bring more new developer?
Yeah, I mean, my feeling though is like how many developers need to actually be there at the end of the day to be the one that's like the EVM expert that is deploying or submitting a pull request to a library compared to, you know, maybe there's a company that's got 400 developers and their core business is blockchain, but only 5 of them on the team are actually really responsible for like blockchain interactivity.
Yeah, I would push back on them and say, how do you define a Web3 developer even? You know, there are lots of people that could be Web3 developers that aren't actively working in Web3 too. So, you know, yeah.
And what is the effect of that for adoption, Web3 adoption?
I mean, I think too, like we're changing the playing field. So let's say you wanted to deploy to blockchain before, and like, okay, I've got to employ 3 people that are going to handle my like Web3 off login. Okay, I've got to like build this thing. And then I have to, you know, I even have to build a layer 2 chain because there's nothing that can make Ethereum run fast. And now it's like, you don't need to, you can launch a product in this space and rely on all of these tools. So I kind of look at like how many people are building tools and infrastructure, and it's nice to see that grow. But there's also this business development capture of developers that are, you know, they might just be a front end developer. They don't know anything about blockchain, but they're doing something really critical to enable people to go and interact with blockchain.
I'll agree with this, right? The entire internet, runs on modern cryptography. How many people are capable of implementing, like, I'll use RSA an example because it's particularly devious if you want to have an implementation that's secure against side channel attacks. And I'll say there are probably like tens of people in the world that are capable of implementing a side channel resistant, RSA implementation. But that hasn't stopped, cryptography or, from being used everywhere, across the world today. And I see a lot of the same stuff happening in Web3 as a whole, right? Lots of people don't need to understand every nut and bolt of a complicated consensus protocol or stuff like that. Obviously these people need to exist. We do need them, but everyone in the ecosystem doesn't need to have a PhD in cryptography, a PhD in distributed systems, and a PhD in algorithmic game theory, right?
Yeah, Okta is a great example, right? They've got all these brilliant cryptographers, but they enable, maybe a regular, someone with a normal set of developer skills to go deploy this advanced cryptography. And, but are they cryptographic related developers? Maybe, but they don't need to have the skill set. They need to be able to deploy. And so I think, yeah, I like your point. We've got to bring more people in, but we also have to make it more accessible by abstracting the complexity away with tools.
That is definitely one of the goals of our open source ecosystem, is to make it, so that it is easier to develop blockchain software. So you don't have to, be a PhD in every single aspect of a system to build a system, because no one is.
Thank you.
Yeah, great question. Anybody else? We'll take one more question. There's a hand, going up there.
Hi. Yeah, so I see for enterprise, there's choice to use a non-public blockchain, Hyperledger and I think Transcript in your case. So in the problem of immutability and sort of the ability to be tamper resistant, and it kind of ties into discussion around decentralization. When you use more of a private blockchain, I mean, how do you have guarantees for immutability and so forth, right? And is that something maybe that enterprise customers don't, they're deprioritizing versus going with a high Nakamoto coefficient public blockchain? But I'm just curious, the approach to that.
I can take this one. So it all depends on your trust assumption, right? Like if you're using some form of BFT consensus, right? You're making the assumption that, typically 2/3 of your participants are honest, right? That's your trust assumption. That's your decentralization, right? And for many enterprises, that's enough, right? If you're a network of banks, you might assume that, one bank running a system would be extremely problematic, but, if you have 10 banks, probably it's going to be very hard for more than 3 of them to get together and collude without you figuring it out, right? So again, as you pointed out, there's a continuum, right? It's not just it's not you're decentralized or you're not. There's a whole continuum of decentralization. And, some of these permission networks are enough for these enterprise applications.
Yeah, Scale is a fully decentralized open blockchain. So I think we kind of end up finding interactions with the CTOs and CIOs of these companies that want an open blockchain. But I know there's other use cases where it is a continuum, and Hyperledger might be something that fits more of the model they're looking for. But I think I used to work in I worked in enterprise software for a really long time. And there's this day where, I don't know if everyone remembers, like when, using the cloud was a bad thing. And you'd go sell to a big enterprise, like, oh, I can't use AWS. I've got to use my on-prem system. And then all those CIOs got fired. I think, we're figuring things out still, but I think before it used to be like, oh, you'd never put anything on Ethereum. It's an open blockchain. And now I think people are picking and choosing based off what fits their needs the best.
And I will say, we do have, public blockchain software. If you're familiar with Besu, right? Like, it's usually like 10 or 15% of mainnet runs on Besu. So we see a lot of people and a lot of companies interested in both public and permission networks, and particularly interoperability between the two.
For us particularly, a permission network is the best use case. Just because when you have 220 HRs serving as validators on our chain, they don't necessarily, there's no incentive for the HR manager at Centene to lie or manipulate data from that's stored on that we store from Spirit Airlines, for example, right? So it really depends, I think, on the use case, and there are pros and cons with going on a public chain versus a permission chain. One issue that we ran into is you can't get SOC 2. It's extremely difficult to get SOC 2 if you're on a public chain, because as part of that compliance requirement to get SOC 2, there's a huge aspect of that chain that you have no control over, no trust over. From a traditional Web 2 perspective, right? You can go fight with that with your auditor all you want, but from his or her traditional Web 2 perspective, there's a lack of trust there. That was an issue that we ran into, and it's kind of the reason why we had to go towards a permission chain.
Okay, this has been great information. Now I want to wrap up in the interest of time, but one last question, and if we can go real quick on this. Are there any significant milestones you're hoping to see from the industry in the next 12 to 24 months? You can start with Zain and work our way down.
The most significant milestone that I'm looking forward to is when Web3 will stop being referred to as Web3. I think it was on to the question over there. I think calling technology by a specific name is very gimmicky. I think VCs promote that so that they can, say I'm a Web3 investor, I'm an AI investor. No, it's consumers just like technology, and they like how technology impacts their life. I think when the next protocol stops advertising itself as a Web3 protocol, but as a protocol that actually solves problems, that's something that will be interesting.
I guess I'll see it as a milestone when people really embrace privacy-preserving technologies, everything in ZKPs, MPC for decentralized applications. I think privacy and concerns about privacy are holding a lot of big enterprises back. And as more solutions come out that address these problems, I think we'll really see blockchain take a step forward.
Yeah, for me, I think about unique active wallets and think about them as if they're users. And so I think you have to, wash out some of this, some of these use cases. But you look at gaming alone, there's over 10 million unique active wallets a day pinging the chain, right? Pinging chains across the gaming ecosystem. And I think when we get to an industry where we have like a real validated 100 million unique active wallets across enterprise use cases, across permission blockchains, open, non-permission blockchains, from gaming to DPIN to different financial applications and business applications and loyalty products, I feel like we're going to hit this next threshold. And to be honest, I think we're pretty close. Like, I think in a year from now, it's not unreasonable that there's legitimate 100 million unique active wallets on chain.
Folks, give them a huge round of applause for sharing their wisdom. This was a phenomenal conversation. Thank you, everyone.